So this will be a brief presentation about the US stock market bubble analysis. So personally, I think US stock market is currently in a bubble. So since the release of the ChatGPT, there's a hype around the artificial intelligence sectors, which drives the overvaluation of the stocks. So what is a bubble? Um, so you can think of the bubble as a room. I think it exists when the price of the stocks goes up so fast because people are so excited about the stocks. When they realize prices are too high, they sell the stocks, and then the prices of the stocks drop a lot. In other words, a stock market bubble happens when the stock prices rises fast and reach so high that they have exceeded their actual values. So here I will use the AI market as one of the examples. AI stock is growing so fast. Since the release of the ChatGPT, people's emphasis on AI and its related announcements just exploded. Uh, for this slide, we can see the impacts of the AI market. There's a optimism about the potential of AI to drive the future profits has made the tech-heavy Nasdaq composite at more than 31% year to date, while S&P is up by more than 16%. So here we can see the Nvidia stocks closed Thursday's trade up 190% so far this year. So here are some methods of the valuation of the stock market. I would say the most important one is the P/E ratio. So we can calculate the P/E ratio and then compare to the market average. For the relative valuation, we can first evaluate the company and then compare the company's valuation ratios to those of a benchmark. And the last one would be the enterprise value divided by the beta. So this ratio compares the entire value of a business to its earnings before interest, tax, debts, depreciation, and amortization. And it's pretty useful to value companies with significant debt. And one other questions we need to consider is that how do we know we're not in the bubble anymore? The first sign we can see is the reduced trading volume because during the bubble, the volume tends to be very high because like people rush to buy the stocks. So after that, you may notice there's a reduction in the trading volume. The second sign would be the changes in the public beliefs because people at first were really excited to buy those stocks, but like media coverage might shift from the potential gains to the potential losses. And the third sign would be the reversion to the mean, because stock prices begin to like more align with their intrinsic value, and it's not that easily as before to be valued that much. And the last one would be you can see that there's a large price decline. So how long will the bubble last? So personally, I think the bubble will still last for many years, though the exact number of years is still very uncertain. Because AI is applied to different fields and it has shown in transformative landscapes. And people's beliefs about AI could change, but I think they will still remain very positive about AI's impacts. And AI makes people's lives easier and work efficiently, and people's reliance on AI is growing.